Speaking of executives and salaries, overall salaries for Americans dropped the most in at least 5 decades during the 12 months through June. As consumers pinched pennies, the biggest investors in consumer stocks became net sellers. So let's head to Patricia Wu for more on this trade. Patricia.
Carol, mutual funds, pensions, and endowments are unloading U.S. consumer stocks at the fastest pace in at least 14 years. Institutions controlling over $16 trillion sold $1.8 billion more of consumer stocks than they bought this month, according to data compiled by State Street.
The consumer's going through some things that they've never really experienced before with the housing prices and 401k plans that have become 201ks. So there's some hesitancy on the consumer. What carried us in 1991 was very, very robust business spending. I think what we're going to see in this cycle is a very robust government spending program.
Shares of chain stores, car companies, and restaurant stocks have jumped nearly 66% since the March lows. The S&P Consumer Discretionary Index, along with financials, have posted the biggest gains among the S&P industry groups this year. According to regulatory filings compiled by Bloomberg, investors cut stakes in Nordstrom by 3% last quarter, even as shares climbed 22%. Two retirement plans dumped a total of 26% of Fortune brand shares. At the same time, that stock climbed a whopping 126% off the March lows. Randy Bateman, Chief Investment Officer of Huntington Bancshares, says consumers are taking a wait-and-see attitude now, but believes that consumer behavior going forward will remain unchanged. Bateman says we are a consumer nation, and Bloomberg data shows that analysts have boosted their 2010 profit forecast by 37% for companies that rely on consumer spending. Matt?
All right, Patricia, thanks very much.